under the 10 for the SPY. We look at the daily, we see that we're testing the 50-day moving average. Volume is high on both days. Break of that, we want this 10 across the 50, and we continue to the downside. We needed to get above the 10 before I consider anything. We have had some very interesting congestion. You look at this area right here, you can see that it's pretty much been trading sideways for a long time. False breakouts, a lot of that stuff, crap that you've been having to deal with is because of this, because the indexes are why I start with them. They are the tide for all these rising ships. And they can also be when it's pulled back, you want to see who and you need to have the stops because you then see who's actually naked under the water. But right now we're testing the bottom of this box, and we just need to see what's going on. If you don't like going short, stay in cash. Cash is a position. We have bearish MACD right here, and again on the weekly we have bearish MACD as well. Let's look at the QQQ. We said that we had these tops, lower highs, and it's continuing to the downside. Bearish MACD. Look at definitely see it can come and test these 83 levels very quickly. Volume has decreased, but this is huge volume for the day. So this is definitely not you or me. This is institutional money, and what we do is we are looking to be on the bandwagon of them. We want them to give us some type of direction, and we want to then just get on the bandwagon and ride it all the way up or down. And that's what we have going on so far. We have the Russell. Russell is breaking down to touch the top of this channel, which we said was the weekly channel, gave a shooting star, which I said was bearish price action, being that they pushed it all the way up to the bottom of the channel and brought it all the way down, and they're following through so far. Again, these weekly candles are not closed until Friday, so we see how the price action, but again, we have bearish MACD under the 10-day moving average. We try to keep it a KISS method as much as possible. We have the breakdown with some follow through, bearish MACD cross of the diamond, so we have to be very, very careful regarding that. Let's get into some individual names. Matter of fact, let's look at the weekly. So this one, as I said, of all of them didn't look that bad, but it is testing the 10-day as well. So let's look at some names. We have financial sector. We have BK breaking down still. We have Bank of America looking weak right here, right now. Bearish MACD for a while, actually. So it's continuing to the downside. Where can it go? Definitely can come back and test this area, but it may be this level. If we look, let's say on an hourly, maybe we get some support around this area, which it did bounce a little bit of today. But if it doesn't break that, it could definitely tear down way less to that 16 area. Excuse me. We have Citigroup. Citigroup looks really bad on the daily. I mean, this is just the support level right here, around this 46, and it definitely can run very, very quickly. Let's look at the weekly, and you can see the weekly has been just churning sideways, and now it's breaking down below. So this last line in the sand of this 46.19, and it goes down lower. Goldman Sachs, again on the weekly, looks bad as well. We have the bearish MACD cross way back, and you can see that we had some great follow through with volume to the downside. So you have a lot of crosses. You have 10 crossing the 50, the 10 crossing the 200, about to cross that. So that, when's the last time that happened? I can't see anything right here. I mean, I'm only going back to the beginning of the year, but you can see that this is a major concern. You have Apple. Apple broke down to the downside, continued to the downside, broke below this, and looks like if it continues, I mean, it's bearish MACD, it could definitely come back and test these areas, this 515 area very quickly. The top of this candle, I mean, it's to fill the gap, is 515.13 from this huge gap right here. So right here, right now, if you're looking to get long Apple, now is not the time. You have LinkedIn continuing to get beat up. You got Bidu continuing to get beat up. Facebook continuing, gave you a little pop at the end of the day, and it just faded. So we just want to test this one, but if it breaks below these lows, this could just be a little small flag. It definitely came and filled this gap, so it could continue to the downside. You have Twitter. Twitter is just looking like it's setting up for more lows as well. I will be looking at this one tomorrow because it is under that IPO price, so it definitely could come back and test this 38 very quickly. What else do we have here? We have some names that might be looking to keep in the watch list. We got Ralph Lauren, we got FedEx, we got Under Armour, that's looking to fill that gap if you see it right here, definitely. You have American Express continuing to the downside. You have Intuit, that one looks sick as well. Expedia, that one looking to fill this gap as well. You have St. Jude looking to continue to go down, maybe to fill this gap or even this gap down here. You have AOL testing the 200. You got Yahoo past the 200. So this one, you might just, if you're not in right now, you maybe look for a little flag, and then it rips down to the downside again. Don't fall in love with them. And the AOL testing the 200. So maybe we get a little bit of bounce or something tomorrow, but again, the markets are very, very concerning for a lot of, especially, besides energy and utilities, it's definitely a concerning type of market. So if you're not looking to go short, stay cash. Take care.